welcome to the channel. Today we're going to talk about this interesting part on the strategy number one that will be part of my portfolio. So before I begin, I want to make something very clear to the audience that this is not an original strategy that I invented. So it's a copy of a strategy that is described, back tested, and presented in a book, and I found it interesting, and now I want to try it in real world, see how it does, and also adapt it to my psychology of drawdowns, my way of doing position sizing, and my way of scaling up or scaling down the positions. So let's get started. So the strategy name is 20% flipper, and it's mentioned, it's one of the strategies that is described, back tested in the book Unholy Grails by Nick Radge. He is an Australian trader and author. I like the book because it doesn't have any nonsense, and it talks about the strategies, the data behind the logic and the practice. So if you find quantitative strategies interesting, go ahead and read this book. Again, I don't have any affiliation with the author. I don't know him, so I just found the book, read it, found it interesting, and I'm just giving the credits of the strategy to him. So let's dive into the rules of the strategy. So first is the universe of stocks that I'm going to run the strategy on will be Nifty 500. Stay simple. The strategy is basically a trend following with momentum used for entry and exits. So that's the core philosophy of the strategy. So what we need to do is find bottoms of the stocks, enter after it picks momentum, exit after it loses momentum. It's pretty straightforward. And by the name you can guess it's 20%. So whenever the stock is moving, maybe I'll go to paint and explain how things can go. So let's say a stock moves randomly, not randomly, it is driven by demand and supply. So let's say it makes moves like this, and I'm assuming, okay, these moves are much greater in terms of percentage in the long run. So on the daily basis, what am I looking at? So the the price that I'm interested in is the daily close. And let's say I pick, I'm starting somewhere in this day. Let's say I'm starting here. The way I figure the stock, how I filter is go back and see if the stock is what I call in cycle or out of the cycle. What do I mean by in cycle and out of cycle? Let's say we started here. We know this is the low of the stock. If the stock moves 20% from the bottom, this low, somewhere, let's say here, I'm saying this is my basically buy signal for my strategy, 20% from the low. Now, once it gives you a buy signal, I mark this stock as in cycle. So it makes higher highs, goes up, and starts coming down. Once it falls 20% from the highest high that it has made on the closing basis, This is the exit signal, and so far during this time the stock was in cycle, and now it is out of cycle. So once it goes out of cycle, I keep recording its lows. So it's lower low, lower low, lower low. So here it's the lowest low, and once it comes back again, let's say it makes a 20% up move from the bottom, again you enter here, go up, 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 again down, exit, down, exit. So you get the idea. So this is how each of the 500 stocks make their cycles. So they move from in cycle, out of cycle, and based on the buy and size, sell signals that we get. Okay, this is pretty straightforward. So you exit, enter, exit. That's that's basically a simple rule of on when to enter and when to exit. Yeah. So so we find the bottom. We finding the bottom is basically once it is out of the cycle, you keep recording the lows, and you keep updating the lowest low of this stock after it went out of cycle. So here, once I exit, I mark this is the lowest low on that day. So this is my reference low. If it moves below lowest low, lowest low, lowest low, obviously then eventually it'll pick this bottom. And once it moves 20% off the bottom, that's your entry. It's clear, I hope. So yeah, that's on the simple rules of the strategy. Now coming to the position size. In the book, he's mentioned that the number of positions that you hold is 20. So I'm going to follow that eventually. Today, because I don't have the capital to have uh have position size of 20 stocks. So how am I saying, okay, what is my rules to say that I don't have the capital? So for me to make it worth my attention, I'm saying for each stock, the minimum amount of money that I'm going to put is at least a lakh for now. So that makes it the minimum capital needed to trade the strategy at full size is 20 lakhs. So I have one of the demat accounts which has about 10 lakhs, and I don't want to liquidate all of my holdings or even part of my holdings just to switch to this strategy. Of course, if it has real edge, which I believe it does. And in future, once I become comfortable with the strategy, I plan to scale. Until then, it's only this capital that I'm going to put, and also I'm in parallel building towards a goal, so I cannot infuse more and more capital at the moment. So whatever 10 lakhs that I have, I'm going to start with that. So basically, I'm running half of my positions now, so about 10 stocks, 1 lakh each, and if it grows, of course, it grows and I can add more and more stocks till 20. But until then, it'll be 10. And if I, in the meanwhile, finish my other financial goal and I have more money to infuse, I'll scale up then. So that's on the position size. So for now, 10 lakhs, one stock will have at least 1 lakh. So that it's interesting for me to track. Huh? And this is one more one of the good rules that I need to explain what happens because you have only 20 stocks to have, fully complete your position size. During good market times, you may find that out of 500 stocks, you may have hundreds of signals, right? So hundreds of stocks are coming off the lows, their respective lows, 20%. So we'll have more than 20 stocks, obviously. So let's say I'm currently at 20 stocks, and there are two stocks that have gone out of the market cycle. Then I need to exit them and replace them with another two stocks that are coming in the cycle. So there is a buy signal, and I need to fill these two positions. So for these two stocks, out of the 500 inverse minus the positions that I already hold, so that's about 482 stocks. Let's say I have 20 stocks that have generated a buy signal yesterday. What do I do in that case? Yes, many people prefer, doing it their way. So some might filter or rank these based on the liquidity of the stock. So how much turnover in terms of value it is generating, that's good to have when the capital is so huge. Let's say if you're trading in crores, maybe, then liquidity is one of the key criteria that you will look at. But at 1 lakh, it's just peanuts in the market, not even peanuts. So you can easily enter and exit. So liquidity is not my concern for the moment. And some people might look at the rate of change from the low. So I'm looking at all the stocks that closed above 20. So it might be that in one day a stock has moved 40%, 30%, 20%. If so, you can choose like this. But I don't want to have any of these biases in my trading system. So what I've decided is to leave this choice to randomness. If there are 20 stocks which have generated the buy signal and I can only pick two, I'm simply going to randomly pick. I'm going to make a random selection and select two of them. How to do this? Fortunately, I'm making automation to have this random stocks selection. But if you're doing it manually, or if somebody wants to do it manually, yeah, you can simply use the good old papers. You can write down names and just flip them and get one. Yeah, kind of lottery. Yeah. Maybe I will try that sometime. Okay, this is on the extra entries. The next thing in my system will be automation. So ideally, I want all of the strategy to be automated. Why? I have my bias here because I'm pathetic at administrative work. I don't like journaling. I don't like commitments in the long run. Of course, the system itself needs some sort of commitment, but if I need to log into that broker terminal every day, make trades and record these trades into Excel, I'm bad at it. I've tried it, and yeah, I do it for some time and I stop it because it's just boring. And yeah, most of the trading is boring. So to overcome that boredom or not having to hate what I do, I want to automate the strategy as much as possible. So I will go through. I'll take you through the codes that I'm doing in future, maybe how I'm doing it. So yeah, that's about automation. And the final thing is journaling. As I said, I hate it. I love it in the short term. I get excited. I do it for a month, two. Fortunately, for few things, I'm doing it for years. That's good. But when it's a lot of entries, it's better to automate that as well. So this will be automated as well, and I will show you how the journal would look like, and it will probably, or it will most certainly evolve over time. So, so that's about the strategy. I hope I have covered most of the things. Of course, there will be some nuances that I may have missed here, but as and when I execute, I will come to those and explain. Okay. So that is all for today. Thank you